some of the continent's leading digital infrastructure shapers, what must be resolved, who must act, and how we can deliver execution together.
And thank you very much for the kind introduction.
Commendation for walking through those slides.
So data sovereignty is important not just for government as well. You see, as AI kicks in,
how can we support these markets really to mature? I agree with Vivek.
But nevertheless, the growth dynamics happen, and we need to flip it to say, okay, we're growing faster.
And at the next stage, once the backbone infrastructure is built, we expect.
Policy has broadly evolved positively, and I think a lot of regulations.
A lot of work needs to be done, and it needs to be accelerated. I think I'm firmly of the view that in the African
they're going to have to think about sovereignty of their intellectual property.
Government is meant to provide that enabling environment, for digital as a transformation.
You need to be able to get through.
Good morning, everyone. Thank you all for joining us at the Africa Digital Infrastructure Outlook Session 2026, our annual Outlook series. I'm Temi Tokbe-Oshunde. I'm Director at Africa Hyperscalers, and it's our pleasure to welcome you to this annual Outlook, which examines, especially in this edition, the state of Africa's digital infrastructure industry and the opportunities ahead of us in 2026 and obviously in the years ahead. So this year's theme, From Ambition to Assets, Building Africa's Digital Infrastructure Reality, brings together policymakers, development finance institutions, investors, operators, and ecosystem builders to address one central question: what can realistically be delivered in Africa in 2026 and within the next 3 to 4 years? And a bit of context. Our digital economy is making a slow but relentless advance. Mobile internet penetration now stands at about 40%, up from single digits a decade ago. However, we're still below the global average of about 62%. Governments are announcing new broadband plans, operators are expanding services, demand for digital services, cloud computing and enterprise applications continue to grow, and then we are in the age of AI announcements. However, gaps still remain. Fixed broadband, which is critical for enterprise digitalization and cloud adoption, continues to lag. The data center ecosystem remains nascent. Africa accounts for about 1% of the world's, Africa accounts for about 17-18% of the world's population, yet about still single digits for data center capacity. And we know that the world the market has been valued about $1.92 billion in 2025. And we expect that strong growth is going to come, but delivery is where the issue is. So this session that we're having will focus on the gap that exists between policy ambition, what we plan to do, what we announce we're going to do, and the physical assets, what we actually do. And then across data centers, cloud, connectivity, and so on. And we're very privileged to hear from some of the continent's leading digital infrastructure shapers today, regulators from Africa's largest markets, major data center operators, leading telecom and tech companies, and senior representatives from global and African development financial institutions. And this insight that they will share today will help us clarify what must be resolved, who must act, and how we can deliver execution together. So a special thank you to Guy Zibi, founder and managing partner at Xalam Analytics, who will deliver the market's brief keynotes on Africa Digital Infrastructure Outlook 2026. I'm also grateful for our distinguished speakers, Dr. Ayotunde Coker, CEO, Open Access Data Centers, Akin Akin-Taylor, Investment Principal, African Infrastructure Investment Managers, Dr. Kashifu Aminu Abdullahi, Director General and Chief Executive Officer, NITDA, who is ably represented today by Dr. Ayo Bakare, Assistant Director, and I'll do a bit of intro of all the speakers shortly. Ilias Djouai, Vice President Investments, Africa Finance Corporation. Alma Nurshaikhova, Senior Digital Specialist, World Bank. Robert Skjodt, Chief Executive Officer, Raxio Group. And Vivek Mittal, Chief Executive Officer, Africa Infrastructure Development Association. And our panel will be moderated by no other than Kazeem Oladepo, Senior Vice President and Chief Operating Officer at IHS Tower. Thank you so much for being part of this important discussion, and I look forward to the clarity, to the insight, to the collaboration and execution that will emerge from this session today. That said, it's my pleasure to kick off by welcoming our keynote speaker, Guy Zibi. Guy Zibi is managing partner at Xalam, a boutique research and advisory firm specializing in connectivity, cloud, and digital infrastructure projects in emerging markets across Africa, the Middle East, emerging Asia, and Latin America. They have a new report, The Making of the African AI Factory, and one of my colleagues will post it in the chat shortly. You can check that out. Guy is the leading authority on the economics of ICT in emerging markets, having previously founded African Next Investment Research and held senior analytical roles at Pyramid Research and the Economist Intelligence Unit. And in my previous role at the main one, Guy was one of those people that about 15 years ago we invited to co-create and work on the Africa panel session at ITW Chicago, which has evolved into the ITW Africa project today that we go for in Nairobi every year. And he has remained one of our committed supporters. My absolute pleasure to welcome Guy for this keynote. So Guy, over to you.
Thank you very much, Temi, and thank you very much for the kind introduction. I don't know if your team can put up the slides. I mean, that would be most helpful. It's an absolute pleasure to be here. I want to start by again kind of thanking Temi and the organizing team for this event. For affording us the opportunity to come in and share some of our thoughts and recent research on African digital infrastructure. These sessions have become a bit of a must, for us who are active in this marketplace. And I think that's a testimony to the great work that you and your team have been doing, Temi, in disseminating the word on African digital infrastructure. So thank you again for that. If you could go to the next slide. For those of you who may not be familiar with Xalam Analytics, I would say just a very quick word. We are an investment research firm. What really that means in practice is that we provide a lot of the market data, investment insights, and other types of inputs. Project inputs that support investment, that supports commercial execution, infrastructure development, cross fiber, cloud, data centers, and AI in the global south, kind of broadly, and in Africa in particular. So the invitation to speak here was quite timely, as it came really in the wake of some research that we had recently completed on African data center markets, and I'm quite happy to share some of the takeaways from that work here. I'll try not to take too much time. I only have a few slides here because I'm anxious, as I'm sure everybody is, to hear from the insights from this great panel that you have assembled. If you will please go to the next slide. I'll just start with a high-level view of where we see the market. Temi outlined some of the some high-level points earlier. I think at a high level, I think it's fair to say that African digital infrastructure is probably as deep and resilient as we've ever seen it. In his introductory remark, Temi alluded to to how long we've been looking at this marketplace. I'll even go kind of far longer than that. I remember as a young analyst, writing my first research note on on MTN's 285 million license investment in Nigeria, and a lot has changed since, obviously. This market has been transformed. There's been a lot of build out that has taken place over the past decade and over the past 3 to 5 years in particular. If you just look at what's been happening kind of across fiber, across data centers, across cloud, you've seen really more than 50 new cable landing points coming alive kind of across across the African coastline, and they've helped bring in more than 200 terabits of design international capacity to the market. There's a lot of build that's taking place at a terrestrial level. We estimate really more than 300,000 kind of kilometers of terrestrial fiber kind of being deployed, over the past 5 years across Africa. And this has reinforced the resiliency, and this is identifying networks, and it's really making it possible, to deploy 4G at scale, and to expand, the deployment of fiber to the home. So really expanding Africa's kind of broadband capability. The upshot of this is that we are starting to see fairly meaningful progress in Africa's digital capabilities. One key number that we like to track at Xalam is what we call meaningful connectivity. That is really the type of connectivity that is always on, available, 20 megabit plus, which we think is really a foundational requirement for digital transformation. And what we see is that this is an indicator that has been accelerating in more than most. So we look at the 4G, 5G, FTTH based, it's almost triple, from what it was in 2020. So we are at about 700 million 4G, 5G, FTTH connections kind of across Africa. And by 2030, we estimate that this is an indicator that's going to cross the billion connection mark. Obviously, what comes with that is traffic that is kind of skyrocketing, across the board, and at that scale of usage, the fundamentals in terms of the requirements on digital infrastructure, and in terms of demand for compute, in particular, that changes a lot of things. So when you look at data centers in particular, the live data center capacity base, has pretty much doubled over the past 5 years. I think 5-10 years ago, the African data center was primarily kind of a carrier hotel. Today's facilities are larger, they are more sophisticated, and they've really become interconnected kind of cloud and compute platforms. So there's been a lot of progress, and we think it's always important in discussions of this type to just take a minute and appreciate some of the gigantic work that has been taking place over the past few years. But as much as we appreciate that, we also appreciate that this is not the destination. This is but a phase, a kind of step forwards, towards kind of a larger, kind of a bigger objective. So what is that destination? If you'll please go to the next slide. Probably a broad mix of acceptable answers to this question. I mean, it is a particularly interesting question now that we have found ourselves looking at what at the global level is pretty much a global race to build AI compute. And we've been looking for ways to harness some of the most powerful, technologies that have ever been created, and we need the compute capacity to do that. So this chart provides a bit of a useful marker for where we are in the broader global context. Right at the top, Timmy was alluding to it in his introductory remarks. You have Africa's contribution to global population, contribution to broadband, contribution to GDP, to global GDP. At the bottom, you have the share of global data center capacity, Africa's share of global data center capacity, share of demand for compute, and share of public cloud. And then one item that we've kind of started tracking 18 to 2 years ago is kind of the share of AI compute usage. And really, you can see then the big gaps between all of these indicators. And this gap gets even starker, once you appreciate that some of these bottom indicators are actually trending down, as other regions accelerate the scaling of their compute capabilities. Right. So to me, a reasonable aspiration, if you will, for African digital infrastructure is that the compute usage, those bottom indicators, start matching, or certainly comes close to matching at least half of the contribution of Africa to global GDP. So you can look at it and see then the gigantic challenge that we face in building what needs to be built. Then you take a closer look, you look at it more closely, and you see the massive opportunities that can arise from building the capabilities that Africa needs to harness, our digital future. So if please go to the next slide, Timmy. So then the question is, how do we get there? That's always a very big, it's a complicated question. It's a big question with a variety of various flavors of answers, all valid in some ways. And I'm certainly kind of looking forward to hearing from the panel's insights on many of these. But one way to capture this challenge in all its nuances, challenges, and opportunities in all the nuances, we thought, was to think and appreciate what we've come to summarize as the four great paradoxes and the four great unlocks of African compute infrastructure. So let's look at the paradoxes first. If you'll please go to the next slide, Temi. It's a bit of a truism, to say that African markets are diverse. Obviously, that is true. But really few markets epitomize this, this truism, as much as African data center markets. They are really a Rorschach test, for the discerning investors. I mean, you see what you see. And some of the things that we've been observing, across the region, we've been fortunate enough to be able to travel around, north, west, south, east. We've pretty much done all the markets, seen, dozens to 100 plus kind of facilities, across the region, and a few things that we see that we've kind of summed up in what we've called some of these paradoxes. The first is what we call a capacity or supply paradox, if you will. So if you look at available data center capacity across Africa, it's been growing fairly fast. It's the live capacity has doubled. The volumes have doubled its size over the past 5 years. In fact, we estimate that in 2025, we saw kind of the biggest growth spike. If we just look at the growth rate, the biggest spike in growth in commercial capacity in Africa in 2025 was between 40 and 50%. And that's the biggest rate that we've seen since 2021. So you have this growth pattern. And yet, the number of new facilities, the number of greenfield facilities that have been coming to market, that number has actually been going down. That's been declining, since 2021. as well. So, and even really more striking, Africa's share of global capacity supply, global data center supply, has been kind of flat to declining as well, or at least it's not scaling fast enough to make up for the lag that the markets are facing. So that's our kind of supply paradox. Then we have what we call a bit of a demand paradox. If you talk to many data center providers kind of across Africa and investors across Africa, one thing you will hear a lot are the constraints around demand. There either isn't enough of it, or it's not growing kind of fast enough. And in some markets, it's been a real challenge, that pace of migration on the enterprise side in particular, from on-prem or cloud to to co-location, as the case may be. The sales cycles are long, and the hyperscalers who have been really making demand in other regions and scoping up capacity, are not quite here. We see this, but then we also see a market where, when we look at kind of the demand patterns that we see, just looking at the numbers, we see demand that's growing by 35 to 40% a year, kind of fairly fast. That's faster than the global average. That's certainly faster than African supply. And we see some markets that are demand constrained for sure. But then we also see a number of markets that are quite frankly supply constraints. There isn't enough capacity for the demand that's been picking up in many markets. Again, investors kind of Rorschach's test. You see what you see. And there are two other major paradoxes that I'll talk about, and I'll not go too much in detail on them in the interest of time. And that is, one is, speaking of hyperscalers, what we call the hyperscaler paradox, where I think one of the biggest, not disappointment, but at least one of the expectations that haven't quite lived to initial expectation was the rate at which hyperscalers were going to build capacity in Africa, at least in terms of deploying public cloud regions around the continent. So that's been a little bit of a shortfall. And we see that. But then on the other hand, just kind of looking at how they've been expanding their footprints, one thing we note is that their power footprint outside of South Africa has actually doubled over the past 4 or 5 years. So it's not that they are not here or not building. They are here, they are building. It's just that the rate and pace and nature of the build out that they've been doing is taking a slightly different shape and form than was initially anticipated. Right. So that's the hyperscaler building. And then I'll close with what I call the power paradox. Right. So on paper, when you look at kind of power requirements, power really shouldn't be a big bottleneck for African data centers. But the data centers really, within the broad context of African power consumption, account for less than 0.5% of African energy consumption. I mean, we are not in Ireland where it's 20% plus, or even in the US where it's 3-4%, 4-5% in various markets. So the consumption levels at a macro level is still fairly low, and the region has kind of massive natural endowments for power generation. Right, but the reality is that most African power grids are just not equipped to support the growing requirements of African data centers going forward. So there should be power, but there isn't enough of it that is reliable, that is affordable in terms of cost, and that is sustainable enough to support data center needs. And that's kind of the power paradox. So let's close it out with, I said, 4 great paradoxes and 4 great unlocks. So let's close it out by talking about some of the unlocks. If you go to the next slide, Temi. The unlocks are some of the keys that we see to unlocking some of the constraints and other bottlenecks that we've seen hampering African data center markets. Now, some of these challenges are fairly complicated. Some of them are fairly systemic, and they've been around for decades. So, there are no necessarily simple answers to any of these, but we can say that there are some things that have been demonstrated, to work, or at least be part of the solution in other circumstances, and we believe they can provide at least some options for path forward, or certainly be part of the solution mix, as we look at ways to unlock some of the bottlenecks that I've just outlined. So first, this demand unlock. Again, I was talking about the demand challenge, across various markets. How do you unlock demand further for African compute and make business plans bankable and so on? At least kind of help make them bankable, as the case may be. There are a variety of paths to unlocking demand. We think, but there are two that we thought might be worthwhile to highlight here. One will happen organically, right? And that's really the wave of increased data usage that is rippling all the way to stimulating demand for compute. I mean, it is what it is. You can't really, we don't think you can really kind of force it, other than kind of finding ways to giving people more access to meaningful connectivity. And we found that there's a high correlation kind of between high level of penetration of what we call meaningful connectivity, and that is, again, connectivity that's above kind of 20 megabit per second, that is affordable, that is always available, as the case may be. The high level of correlation between increased penetration of meaningful connectivity and demand for and domestic demand for compute. So if you look at that meaningful connectivity piece in Africa, the median penetration was about 45%, kind of across Africa. In other parts of the world, it's close to 100% plus. Right? So it's extremely difficult to build any type of domestic demand scale for compute with 4G penetration below 50%. That's just, those are just the economics of it. So, the data gravity isn't quite there. But quite thankfully, these numbers have been increasing fairly fast. It's one of the fastest growing indicators that we track across African markets. We think that by 2030, we'll have a median. This is a median, not even the average. We'll have a median across Africa at about 75-80%. And that's a different ballgame when you look at that in terms of compute demand. The other path to unlocking demand for compute, we think, is going to require some type of external stimulation. And one of the key pieces of this, we think, is harnessing the weight of government IT budgets. If you look at that chart on the left, just kind of showing how much markets are spending on IT services and hardware, as a proportion of their GDP. One of the key reasons why the overall Africa average is so low is government spending on IT and on IT services and infrastructure. So if you can unleash the weight of IT governments, you can drive transformation across the broader public sector, and that has an effect on other verticals. So currently, government IT spending on government spending on IT is either too low or exists, but it's fairly inefficient. So there's a fair amount of work that can be done there, and if you can unlock that, then you have a demand that a wave of demand that we think is stimulating to the broader ecosystem. Another point here is that we probably been guilty of this as well, but we've largely stopped obsessing too much about hyperscaler demand. We think hyperscaler demand is going to follow some of the, some of the organic demand that I was mentioning earlier. Is going to follow some of the unlocking of government IT demand. It's obviously great if you can have it. It makes a major difference to growth and to business plans. But in the African market in particular, what we found is that hyperscalers don't make the compute demand. I mean, they can catalyze it, they absolutely augment it. But the key to compute demand is the enterprise, its telco, and its content in our assessment. If you go to the next slide, please. The second unlock here on this theme of unlocks, Temi, I don't know if you can have the next slide there for me. As I try to close out, the second unlock here is power. How do you unlock some of those power requirements that that the continent is going to have, which are considerable, really, whichever way you slice it. If you just take our base kind of supply forecast, using just our supply forecast, we see that the African utilities are going to need to deliver another 1 gigawatt of utility power to data centers over the next 5 years. If you project that Africa is going to be, let's say, 0.5%, of projected global AI demand, which we believe is not an unreasonable projection, then you're looking at almost 3 gigawatts of new utility feed capacity that will need to be articulated to data center campuses. So that's a lot of power. And if you expand that further and you say, okay, Africa is going to account for 1% of AI consumption, you start talking almost 5 gigawatts of utility feeds. I mean, subject to technology efficiencies that may kind of lower kind of high density and those types of things. But overall, you are going to need a lot of power. How do you unlock that? Obviously, more investment is needed in grid infrastructure, and a lot of that is starting to take place. But then those things take time to build and require a lot of capital. What we've seen work best ultimately is flexible regulatory regimes. In our view, give data centers the flexibility to come up with options, to figure out their own solutions, and usually they will figure it out. If you please go to the next slide to kind of close out the last two unlocks that I want to run through relatively quickly here for giving way to the panel is the fiber connectivity, the fiber unlock, or the connectivity unlock, and the capital unlock. On connectivity, I mean here kind of primarily terrestrial fiber connectivity. I think this is quite often underappreciated in terms of the impact on data center markets. When we look at markets outside of power, this is the item that really, and demand to some extent, this is the item on the supply side that really keeps us up at night, kind of looking ahead. The ability to have access to a diversity of sources of high capacity bandwidth at competitive prices, and on this call, competition is probably still the best way to unlock that. So there's a conversation to be had there. Capital is the last unlock that I'll talk about, and I'll probably talk the least about it here because I think we thankfully have people on this panel who can speak to this a lot better than I can. What I will say about the capital unlock is that we've estimated that the market is going to need around $2 billion a year in capex, kind of going forward by 2030. To meet compute requirements, and that's just the data center piece of it. If you add the IT compute piece of it, you're talking 3 to 4 billion a year of capex that's going to be needed over the next 5 years. Now that's a lot of capital, but I will say that if you look at Africa, the telcos in Africa are spending about 8 to 10 billion a year in capex. So these types of numbers are not unprecedented for Africa, but obviously the telcos have the balance sheets and they have the historical kind of cash flows to support this type of spending, and it's tough to do it with this type of heft. And I think generating kind of funding this type of capital requirement is going to be one of the biggest challenge that this industry is going to face going forward. So 4 great paradoxes, 4 great unlocks, and there are always reasons to be concerned. But ultimately, we are fairly bullish about this market. I think our view is that this is still a fairly generational opportunity to build the foundations for Africa's future digital economies. So here, more than most, you do have to be deciding as an investor, because this is a tide that is not going to lift all the boats, but it's going to lift many of them. On this note, I'm going to stop here, and I'm very much looking forward to hearing the panel's discussion on this call. Thank you for your attention, and thank you for having me.
Thank you so much, Guy. That was, as usual, a very insightful, very data-driven deep dive into Africa's digital infrastructure landscape. And then some of the points that you made, the meaningful connectivity, as you have described, has increased, has tripled, in fact, over the last few years, and we expect that to hit cross the billion mark within the next 5 years. Also interesting to hear your 4 paradoxes, which are very, very poignant anyway, around data center demand, around hyperscalers, and around power. One of the events we attended, NITDA is currently doing something around sovereign cloud, which seeks to make the government and its entities one of the biggest purchasers of cloud in Nigeria. And I think that it's a good one, and hopefully it helps stimulate the local markets and then make raise more bigger and better data centers locally, and also bring in some of the hyperscalers. And also like your reference on project bankability, which is one of the key themes of last year. Investors were talking about bankability. This project is not bankable, this project is bankable, that sort of thing. And we believe that our keynote panel would definitely do justice following the insights you have presented. So it's my pleasure to welcome our distinguished panelists for the discussion themed Translating Africa's Digital Infrastructure Ambition into Bankability. And in no particular order, Dr. Alma Nurshaikhova is a senior digital specialist at the World Bank. She's based in Abuja, where she leads the bank's digital development portfolio in Nigeria, including digital ID, resilient digital infrastructure, and digital economy programs, including Nigeria's ongoing Project Bridge, a 90,000-kilometer project, which is believed to be the biggest the biggest digital infrastructure project currently in Africa. Since joining the World Bank in 2014, she has worked across Europe, Asia, and Africa on GovTech, public finance, and service delivery, and previously held senior roles at Kazakhstan Sovereign Wealth Fund and the UNDP. Robert Skjodt is the Chief Executive Officer of Raxio, a Pan-African data center platform developing hyperscale-ready, carrier-neutral facilities across 6 African countries. They should launch in Tanzania this year, which makes 7. With more than 30 years of experience across energy and infrastructure, he previously served as CEO of BT Renewables, which was acquired by NG and Meridiam, and held senior roles at ABB, where he focused on resilient low-carbon digital infrastructure in emerging markets. Dr. Ayotunde Coker is the Chief Executive Officer of Open Access Data Centers and former chairman of the Africa Data Center Association. He has over 30 years of international experience as a global CIO and technology executive, and has led major technology transformation across the UK, Europe, and Africa, including senior roles at BP, the UK Ministry of Justice, Access Bank, and his most recent role Rack Center, where he scaled it into one of Africa's most recognized data center brands. Vivek Mittal is the Chief Executive Officer and board member of the Africa Infrastructure Development Association, AfIDA, where he leads the Catapult Accelerator for early-stage infrastructure developers alongside training and advocacy initiatives. If you have attended ITW or AfricaCom in the recent years, you'd have seen some of those sessions. He has over 25 years of experience across energy and infrastructure finance, having worked as a lender, investor, and developer on more than 60 projects in 25 countries. He has prior roles at ING, Enron Europe, Edison Capital, and the Bank of Scotland. Akin Akin-Taylor is an investment principal at the African Infrastructure Investment Managers, AIIM, where he leads the data center and telecom tower strategy across AIIM's Pan-African funds. He's a director on the board of African Digital Infrastructure Investments, the parent company of N+1 data centers, and has executed transactions across digital infrastructure and energy, including AIIM's investment in East Castle Towers and N+1 data centers. Ilias is Vice President of Investments at Africa Finance Corporation and a Senior Investment Director at CDG Invest with extensive experience in private equity, leverage finance, and infrastructure investments. He previously held senior roles at FIPA Holding, Bridgepoint, BNP Paribas, and France Telecoms. Kashifu Inu Abdullahi, Dr. Kashifu Inu Abdullahi is the Director General and Chief Executive Officer of the National Information Technology Development Agency. He brings over 20 years of experience in Nigeria's ICT sector. He's led significant digital economy reforms, including the establishment of the Nigerian Data Protection Commission, the IT Project Clearance Program, National Digital Literacy Initiatives, and more recently, what I referred to earlier, the Nigeria Sovereign Cloud Initiative, which we are privileged to have collaborated on. He's been called to a national assignment this morning and will be represented by Dr. Ayotunde Bakare, the Assistant Director at NITDA, and in his own right, a leading expert in cybersecurity and digital transformation in West Africa, who has played a key role in strengthening Nigeria's cybersecurity frameworks, advancing zero trust architecture, and leading national initiatives that train thousands in blockchain and emerging technologies. And to our distinguished moderator today, no other than Kazeem Oladepo. He's the Chief Operating Officer and Senior Vice President at IHS Towers, Africa's largest telecommunications infrastructure company, and the world's fourth largest independent tower co. He oversees more than 16,500 towers, 16,000 kilometers of fiber, and extensive RAN as a service deployment in Nigeria. He previously held senior leadership roles at Main One, now Equinix West Africa, and Starcoms, Nigeria's first CDMA provider. He's one of the key persons that shaped the industry in Nigeria and West Africa as we know it, and is one of the people that helped shape the Africa panel session at ITW Chicago I mentioned earlier, and he's one of my egbons. So it's my pleasure to thank our speakers and Kazeem for joining the session. So Kazeem, over to you.
Yes, thanks, Temi, and thanks everyone again, and also thanking the participants on the session, and of course our distinguished panelists. I think that, Gay, I should give you a resounding commendation for walking through those slides that helped to sort of give the background to the conversations that we will have with the panelists today. But and it sets the stage for the engagement and the insights that we're hoping to get from the panelists with respect to the state of digital infrastructure in Africa today, and what can be or what needs to be done to move things forward so that the continent can continue to be digitally competitive with the rest of the world. But let's dive into it. And I think my opener to the panelists on this session is the bit around how much the continent has done relative to the rest of the world. I mean, looking at the presentation from Gay and the 1.4 million kilometers of fiber on the continent, and I was thinking Europe is over 350 million kilometers of fiber. It's accounting for almost 26% of the total fiber footprint in the world. So, and that's half the population of Africa at over 1.5 billion people today. And here we are, just a fraction of what exists in Europe. And I'm thinking about data center IT power as well at 500 megawatt, and I'm thinking the United States is over 60 gigawatt of computing power. So is this continent ambitious enough? And I think this is a general question to all of the participants. Are we really as ambitious as we should be, given where we are as a continent and where, of course, the opportunity places us today? Vivek, over to you, please.
Sorry, did you want me to comment on this?
Yes,
No.
yes, your comments. Is the continent ambitious? I think it's a general question to all of us.
I think, I didn't expect to go first, but you really started with the key question: are we right-sizing our ambition? I mean, from I think Guy's presentation was mostly upbeat, but it is actually quite distressing to see that we are not even keeping up to the 2% of global economic activity in the digital space. And just for context, I'm actually, I had to take a sudden trip to India. I just landed in Delhi, and it's wall to wall plastered with AI for impact. Thousands of people are descending over here this week to all the great and the good, including the CEOs of Google and NVIDIA and a few presidents. They're all in town. Now, why shouldn't Africa have the same sort of impact? And I put it down to about three things. So actually three things. Investments actually, so right-sizing ambition. 8 gigawatts of power. Power doesn't work very well, but it works a little bit better than it used to. And Robert, who's come from that sector, will attest, I think, that 8 gigawatts for the continent is not very much at all. You could double it, and it's still not very much to deliver. The question that comes to us is that actually the investments don't work because we need an ecosystem for transactions to come through. Even a simple solar project takes about 15, 16 primary institutions and another 10 advisors to come together to put it together. So that execution capability doesn't work very well. Number one. Number two, there is an interconnectedness, right? Power depends on demand. Data centers depend on the connectivity and power. But actually, the end user who's paying for it, and this goes to, I really look forward to Ayotunde to explain this later because he does it so well. The end user has got too many demands of high cost, underperforming utilities on their very fragile, small amount of income. So there is a proper affordability challenge as well, which is actually a prosperity problem that we're not able to tackle. So this loop of vicious circle where things that are interdependent on each other not working very well. So there's interconnected prosperity and the fact that the ecosystem doesn't work. But it all comes, one of the big drivers is the will, the political will, and the political vision of the country as to where we want to get to and why doesn't really work that well.
Yeah. Thanks, Vivek. Now, Robert, and that's an interesting perspective from a infrastructure financiers standpoint, which I thought was already stepping somewhere into where an operator perspective would come in. So, Robert, what are your thoughts? Are we really right-sizing in terms of ambition? Are we properly led? Are we focusing as a continent on where that growth needs to be at? Or we're misled by trying to be what the continent, by its peculiarities, isn't in terms of where we want to be in the entire digital society's footprint?
Kazeem, it'll be a sad day if we as a continent don't have ambitions, right? So I don't think it's a matter of the ambitions being wrong. I think it's a matter of having the right strategy to meet that ambition, right? And it's very fragmented. And what we see, I think, is that execution, if I talk from a data center space, execution often stalls at the intersection of demand, certainty, and capital, right? So the one thing so Guy's presentation is, as usual, spot on. There's one metric he doesn't have, and it's probably very difficult to get, is one thing is data center capacity. We see it grow. What's the capacity utilization been over the last year? What's been the growth in that, right? And that's actually where this probably the disappointing number is, to be honest, right? Because that demand certainty is not there. I mean, we can build the world-class infrastructure, but demand formation takes longer than both policymakers and business plans assume. So enterprise cycles, so getting the enterprises in, let's take the cloud hyperscalers away for now. They can run 12 to 14 months. It's an investment they haven't budgeted for. And then on the same time, you have that customers will not sign up for co-location, for example, until the facility is operational. Yes, I come from the infrastructure, renewable energy, right? The minute you switch that on, that is cash flow positive. That is not the life that we live here, right? So the assets will be technically complete, but commercially underutilized, right? And that timing mismatch is what makes capital nervous. So we are simply underestimating how long time does it take for markets to mature. And I think where the strategy needs to focus on is how can we support these markets really to mature? I agree with Vivek. I'm not concerned about power right now. Let's go away from the big markets. I'm not really concerned about that. You take the Mall of Africa in Joburg, it spends 4 megawatts of power. The typical data center facility outside of the big 4, the big 5, is typically around 1 megawatt, which globally seen is classified as a micro data center. No one has any doubt that these data centers are going to fill, but it just takes time. Now, we need to have that patience and then at the same time work on how can we stimulate the growth. But there is a very good point from Vivek, which is often not spoken about, which is the affordability of the local enterprises. You have countries, and I've been there, and I've visited clients that had water in the server room, but they simply cannot afford to buy the very expensive server equipment that you often use when you move into a data center. So that financing is a part of it as well. It's actually not the co-location that's the expensive part, right? So for local banks in a lot of our markets, that is a challenge. And it takes time for them both to get it through the budget, but also the decision cycles, the buying it, etc. But Kazeem, we should not go down on the ambition. We should not reduce the ambition. What we need to understand is it takes patience. Now, that patience, of course, comes with a price, but I guess we can start unpacking that, but then I'll be talking for hours. So let me pause there.
Thanks, Robert. And I like that focus on viability, basically. Why would you deploy or invest capital? I think it also comes through what Vivek had mentioned about how do you drive that enterprise utilization that helps you to put value on these digital assets in a way that there's sustainability in those deployments. But we'll come back to that a little bit. And I want to go to Mr. Ayotunde Coker because despite this initial feedback, when we look at the market today, or when we look at the continent today, there's still ongoing build and deployment, both at the data center level, which is where I think Gay concentrated more, but even in the fiber optic networks and at the subsea network as well, as we have to Africa, Guyana, and I did see on Gay's slides about 60 subsea landings on the continent, which is impressive when you look back at 20 years ago when probably about 4 or 5, at best maybe 6 subsea cable land continent. That has meant that a significant growth in upstream. Our data centers are growing. And Mr. Coker, when I look at your organization, you've done across, I think, 5 countries now on the data center side, and of course, across the East, South, Central Africa, you also have the subsea cable coming in the WIOC system. What is fueling those deployment? What do you see in the horizon? Why is WAC and OADC bullish in this market in the past few years?
And hello, everyone. It's great to be here. The information that Guy shows the growth that has dependencies. You always have this link between the data centers, the connectivity, and the energy. And around that is also the ecosystems you build that allows you to create data centers that actually get out to the eyeballs or point of consumption. You're right that we've seen that growth in capacity, and you've been in a part of that growth over the last, 12 years, 13 years in time. And then the raising of the stakes with Google Acquire Cable coming in the West Coast and Meta's to Africa, both on the West Coast and the East Coast. That's great. The key thing is to evacuate that capacity into the points of consumption. But also Guy's information showed that you have that growth to the tipping point of the median level of connectivity of meaningful broadband. That's very, very important to get access to the eyeballs that consume. And that projection is what gives the promise of the future. But also the reality of now is the fact that we're seeing those growth dynamics. But as Guy also mentioned, I mentioned this a few times before, is over the years we've talked about 1% of global capacity. It's a shame to see it come down to, despite growth, we're building significant build-outs in South Africa, significant build-outs happening in Nigeria. We've seen what's been happening in Kenya, Egypt, so tier one markets as they've been called. But what's happening is it's not growing fast enough of available capacity. There's also expandable capacity where you've already got land available, planning is done, and so on. You need to build into that. That's another significant level. But it's not happening as quickly as the rest of the world is building out. India, for instance, Vivek talked about what's going on in India. But Africa is not forgotten in this conversation, because I was in Paris a couple of weeks ago, where was a conference before the India one that is at now. And Africa was actually part of that equation of discussion. So there's some, interesting sort of shoots, I guess, of consideration for growth. Now, you look at the percentage gone from 1% of global to 0.8%. If we get that growth in the meaningful broadband penetration, it then starts to trigger those demand dynamics. And a lot of the large companies that provide content, and so on, they see these things, they see these growth dynamics. It's a matter of aligning that entry into the market or growth into the market at different scales to the reality, because there's also a challenge of significant global demand. Where do you get the capacity to also then bring about what's happening in Africa? It's a resource constraint globally as well. But nevertheless, the growth dynamics are there, and we need to flip it to say, okay, we're growing faster enough to be able to meet at least those ratios globally. But it's encouraging to see what Guy has outlined. Same thing with energy. Look, all over the world, this is an equalizer, because everyone's struggling with getting access to utility. So, companies are now looking at how do we build IPPs, what kind of power purchase agreements will work, what kind of relationships and partnerships do we need to put in place to get the power part of the equation in place. So that's another thing that's a reality that we face. And there are solutions being put in place. Around Africa, you have different sources of the energy around hydro, around geothermal, around gas, which is being seen as the cleanest fossil alternative to generating power. And there are pockets where we have a lot of this. the time to build infrastructure and cable and so on takes time. So we have to build that confidence in these trajectories. That means we build in time to meet the demand, because if you don't have it in place, there's no way to meet the demand. So you have to get, it's a challenging one, as Robert mentioned. You have to get that confluence right, but we have to believe in that demand as well. Why would we believe in the demand? Okay, if we get those other things right, connectivity, energy, and building out the capacity, there's a pattern of demand in Africa. That's what I call sort of the sachet economy, and in terms of affordability as well. We have to get affordable core-based infrastructure, affordable connectivity, for instance. We might say, okay, yeah, the cost per gigabyte of access is lower here, but then when you look at the affordability of that cost, it paints a different ratio. But somehow the MNOs seem to do it, because Guy also just said MNOs are spending over 9 billion a year. So something happened there. Why? You see, the demand profile is that this sachet economy, people will buy on a needs basis. They earn today to spend tomorrow. It's the top end of societies generally around the world that will buy for a month or 2 months or whatever. And it's amplified significantly in Africa. So the MNOs have shown, if you can tap into that, buy, earn today, spend tomorrow, on a pay-as-you-go basis, then it can be really quite profitable. And what we're delivering in terms of cloud, in terms of connectivity of pay-as-you-go, taps into that dynamic. Something else is coming as well. We talked about sovereign cloud, so on. There will be increasing view of taking an Africa-wide view on data sovereignty, not country by country. In which case, the infrastructure will be developed to bring more general Africa-level sovereign cloud into Africa. That will tap into the growth dynamics that we're seeing and the individuals that are building the real data center scale. It's right, he said, not a rising tide will not lift all boats, but it will lift the boats that can sail the scale of the depth or whatever else it is, and so on. And you have players that are stepping up into that. So looking at that mix in dynamics, we should see, should is a very powerful word. I would prefer to be able to just say will see that rise in demand. There's another piece here as well, AI. AI is already becoming pervasive. What will create scale in Africa is the inference layer of AI. There's also the learning models. You see increasing medium to small scale learning modules that bring, large learning models compute elsewhere into the context of Africa as a whole and regionally. You will also see inference layers. They're going at around about your 2-3 megawatts, so on, coming in, and they'll go into the facilities that have the right architecture and scale. If we don't have it, then it becomes a challenge. So we have to strike that balance of building the scale in time, right? And then the other piece is the agentic piece. It's latency sensitive. So it needs the connectivity to reach the eyeballs and the ecosystems to reach the eyeballs efficiently. That will also drive scale to meet some of those projections that Guy was highlighting. And that is where we need to believe that we have to make that happen. But overcome this challenge that we're not building it out quickly enough, we're not drawing the demand scales quickly enough, because that means we've gone from 1% of data center capacity to less because the world is building bigger. We need to build bigger faster. And there has to be the interventions, not just, say, locally, by governments, by other global bodies, the awareness that this really is the next place to build that infrastructure out at scale.
Thanks, Mr. Coker. Appreciate that. Let me go. Let me digress a little bit outside of, and I think it's not even a digression. I think it's a necessity on this session to touch very strongly on this issue. So amongst the speakers, we've had conversations that skewed on one hand to what I would call demand factors, and on the other hand to supply factors. Now, Alma, I'm gonna ask you and Ilias for your perspective on this. There is that intersection somewhere in between what markets is available, or what products, or what infrastructure is available that is anchored by your sector of the entire ecosystem, which is where the funding and the financing comes through. What are the sort of things that you're looking at to ensure that there's an alignment somewhere here that makes the projects that give rise or that births this infrastructure that we're talking about realizing in our market? What typically are you guys looking at? And are you seeing those things in the market that gives you the comfort? Alma, I know you're part of the bridge infrastructure funding. Is that something that you have seen that gives you the comfort that if this capital is deployed, it would birth this infrastructure, and there's a demand somewhere that is heavy enough to support the investment case for that infrastructure? If it's not there, what is missing that you think we need to all focus on as an industry? Continent.
Thank you, Kazeem, and good afternoon, everyone, and thank you for this question. So from the World Bank perspective, right, our goal is, of course, to generate growth and create job opportunities through access to digital infrastructure, right? And by access, we mean hopefully universal access across Africa. And therefore, we are seeing, especially in the digital sector, that there are many instances of a market failure where the private sector, for instance, in Nigeria, right, we all know that most of the digital infrastructure is provided by the private sector, and Nigeria actually stands out in Africa as it doesn't have very the state-owned enterprises or state monopoly in the digital sector, right? So, but the private sector we see cannot provide access to remote areas, to rural areas, wherever they don't have any kind of the profit margin. Therefore, in these cases, that is when usually the public sector should come in as a catalyzer for that market, right, for the private capital. And here, for instance, in Nigeria, through this bridge project, which is building a resilient digital infrastructure for growth project, the World Bank is providing a loan, let's say, to the government of Nigeria to come in as the shareholder for a special purpose vehicle, and that way catalyzing private capital. So basically, if the government comes in with, let's say, 49% of financing, which is estimated at around less than 1 billion, the expectation is that the private sector will respond to that and come in with 51% or 1.1 billion worth of investments into the backbone infrastructure. And at the next stage, once the backbone infrastructure is built, we expect that local internet service providers will take over and provide last mile connectivity. So looking at many countries, even developed countries, and just recently I presented case studies of Australia, Sweden, and Korea, and these are very much advanced and developed countries with different territory sizes, with different population density. But in all those countries, the role of public sector was quite important in making sure that the broadband connectivity is universal. And this is the model that we are trying to use across the countries, where we are trying not to crowd out private investors. But CrowdIN provides some risk insurance, mitigate risks, provide guarantees, use blended finance options, but also ensure that there is a demand, let's say, from the government, from the different sectors like health, education, the government itself as the digital public services providers. That way, we are hoping to match the demand with the supply, ensuring credibility of public and private investments and more capital flow. Thank you.
Thank you so much, Ilias. I'd like your view on this because, again, demand supply intersection, but also public money and private money. Because the objectives in a lot of cases may not align. Our public sector objective, which is public utility type mentality, and you've seen in other markets where government has not been able to do private public sector type partnership because of this misalignment. Do you see traces of the content evolving and maturing these days to the extent that you guys are looking at projects where you have the comfort, again, comfort, that you can work with government and private sector for deployment of digital infrastructure and be able to harness both on the demand and the supply side the required requisite bandwidth to make this infrastructure be sustaining and run efficiently?
Thank you, Kazeem, for your question. So I think I'll start by addressing first what makes a project bankable or investable for private investors or DFIs. Basically, you have 4 or 5 requirements, which are, I think, now obvious to any operator. Is the first one being having an anchor lease, so at least one client that takes a significant share of the capacity, if it's a data center or a fiber, and shows that there is a market demand. We prefer multiple clients, but you need to have a trace of private sector interest. Have power supply agreements in place. I think that's very important, especially for the data center projects. The land titles and property situation has to be clean as well, because you have a lot of jurisdictions where it's very difficult to have a clean land title. There should be a revenue model that addresses any currency mismatches. As you've seen over the last years, currencies have devaluated very fast. So we need to have, if you take a debt in euro and USD, you need to have at least some of the inflows in terms of revenues that are in hard currencies to hedge the company from the devaluation. And finally, there needs to be a skin in the game from the sponsor that's developing the project. I think that's a part that's often forgotten, but it's very important that the player, or be it a physical person or a company that comes and develops the project, has skin in the game. Now, from a PPP, public-private partnership angle, I think you addressed the ambition question at the beginning. And I tend to see that there is ambition and that policy has broadly evolved positively. And I think a lot of regulators and governments have put the digital question amongst the top priorities of the governments. You can see it from the creation of ministries dedicated, or if it's not ministries, departments dedicated to digital development or infrastructures. Unfortunately, I think where we have a problem usually is that you can see a country announcing a very big project. It can be 5G rollout, hyperscale data centers, national fibers, backbone or metropolitan backbone. And along the way, so you have an announcement, and then the project is supposed to be ready in 18 months. But what you often see is that it's the execution that fails. It's not necessarily the ambition or the policy. So for example, you can see if it's a 5G rollout, you can see that the spectrum auction terms are being revised, or the process is very long. The modalities are complicated. The designation of the bid winner is not very transparent. If it's a fiber project, I've seen examples where you have a project, metropolitan project, that is announced for a deployment in 18 months. And then you realize that you need right-of-way permits from 6 different municipalities that are not necessarily going for the same, that do not have alignment of interest with the national level of authorities. So that can create delays as well. Power agreements is the same thing. You have power agreements that require a lot of work and are often not finalized. So the projects that should be delivered in 18 months then become a 4-year milestone project. And I think that creates friction and uncertainty that investors are not necessarily able to bear, because it increases the construction costs, because you have to mobilize APCs, etc. And there's inflation in the cost of equipment. Sometimes you have delays for long lead items. The project IRR goes down. The debt can be repriced. And so this uncertainty, I think, is what creates sometimes the lack of attractiveness for projects for the private capital. So I think there's another aspect, is that you have a lot of authorities involved. So you have municipalities who give permits, Minister of Transport that can demand traffic impact studies, environmental ministry that will demand environmental assessments, security agencies, telecom regulators, and they each operate independently. And I think having a PPP delivery unit for the digital aspects, where you have only one point of contacts for operators, would greatly improve the execution of those projects. So that's what I would recommend: a single digital infrastructure delivery unit with parallel treatments of the different problems. And I think standardization in the type of documents that are demanded for digital infrastructures as well would accelerate the execution of projects. So I think this is more or less what we come across as AFC, and the recommendation that we would make for accelerated development of digital infras.
Thanks, Ilias. Your suggestion is actually quite appreciated in terms of looking at ways to solve these alignment problems by cooperating at the policy level, which would ensure that what you describe as the biggest impediment to being able to deploy infrastructure be bankable, is also the lead time to close all of these varying factors or policies or approvals or processes, by having all of them be coordinated through our collaboration between the private and the public sector people. But going back to the alignment issue, and this is important for me because, again, based off of what Ilias just said now, a lot of the large infrastructure projects on the continent would require public participation, at the minimum on the demand side. Have you, in your experience, looking at projects and the ones that you're currently funding, found the requisite level of collaborations between government and private sector investors that, again, gives the assurance that we can scale infrastructure on the continent on a progressive basis beyond where we are now, or that there are still things that we need to deal with to make this smoother than it currently is? What's your perspective?
Thanks, Kazeem. Look, I think from my perspective, I think the first thing I will say is, I think we've seen that in Africa, right? When when governments really want to do something, they see it through. And I think we've seen good examples of political will from that perspective, where certain policy decisions which could be viewed as unpopular were pushed through because, you know, for the greater good, for a long-term benefit, and you're starting to see those benefits materialize. So I think this is one of those cases whereby governments in Africa need to show more political will to push through the reforms and policies that help on both the demand and the supply side of this digital infrastructure equation, because they're all interconnected. I think once you have accessibility to affordable services, that drives innovation. Innovation drives further demand. I think on the demand side, while governments obviously have several data localization policies and pushing through digital policy reforms, I think it's quite important for the government to actually lead by example as well. You know, not just talk, actually walk. And in certain instances, yes, we're starting to see that, but a lot of work needs to be done and it needs to be accelerated. I think I'm firmly of the view that in the African context, on the demand side, particularly where you have a very young population, I mean, which we speak about a lot as one of the key things to drive data consumption, etc. I think at the moment, we probably need a government to come through by actually implementing e-government and digitalization of government services so that actually drives demand. And I think if you look at some of the statistics, right? You know, the UN has an e-government development indicator where they show measure maturity of governments in terms of ICT and how they're using technology for government services. You know, African countries consistently scoring poorly. You know, in top 50 countries in the world, there's only one African country. In the top 100, there's only 6, right? And if you look at their scores, there's so much work to do. A lot of the African countries rank at the bottom. And these are some of the things when, you know, historically, we've spoken a lot about hyperscalers, and that formed the basis for a lot of the investments that have gone into date. But, you know, hyperscaler cloud regions have not materialized because while yes, you know, supporting infrastructure is one thing, as Gay said, the demand simply isn't there. They don't create the demand. And one easy way to create scale on the demand side is through the government. And that is one key thing that is missing on the continent. So I think we need to see more of that going forward, and it needs to be accelerated.
Yeah, thank you so much, Akin. You know, so we've talked quite a lot about government. We've talked about policy. Everybody seems to think that if we had more public sector buying, both on the demand and supply side, there'd be improvement. But Robert, I want to come back to you, and this for me is interesting because I did hear Vivek say something very incisive about, you know, the growth of, you know, the need. I don't know whether it was Vivek actually or it was Guy who did say something about how to grow compute and where content hyperscalers and MNOs sit in that equation. Now, from your experience, who is going to drive this? Because ultimately, I think where the MNOs sit is they already have the traffic, they have the network on the wireless network or even the fixed network side. So I don't know that there's incentive for them to deploy services at the edge, for instance, except customers start to complain about extremely poor latency for those services. The hyperscalers, from your feedback, are again mostly concentrated. I think South Africa alone accounts for probably about 75% of hyperscale presence on the entire continent. And there is all this content everywhere. But then we're not seeing that accelerated growth. On whose doorstep is this, catalyst sitting? Who is going to trigger it from your experience? And who needs to do that work?
Thanks, Kazeem. Look, first of all, the growth will happen, but it's the growth rates that we're discussing, right? But the growth will happen. But I think when I travel around and have the pleasure of discussing with various governments on the continent, I hear three strategies, basically, right? So the first one is to hope and wait for hyperscalers and assume that their arrival will catalyze the ecosystem that Vivek also talked about. The second I often hear is that they want to build state-owned data centers to meet sovereign needs. And I'm not talking about the ones out in the rural areas because it's a different discussion, right? But basically, yes, they have e-government ambitions, but they want to build their own data centers. And then there's the last one, which is actively stimulate independent carrier-neutral infrastructure that serves both public and private demand at scale. And I hear all three, but I mean, first of all, on hoping for the hyperscalers, hope has never been a strategy, right? And as we have also been pointing out, it's very difficult to predict when the hyperscalers will arrive. Yes, they will arrive eventually, but also if you wait for that, 80% of the countries on this continent are going to be waiting a long time. So that's probably not the way. Then going back to if you start building in the different puzzles that we just heard from my esteemed panel colleagues, right? So Ilias is asking for an anchor client, right? Which is very well put. Who can be that anchor client when you go into fresh markets or frontier markets, whatever you want to call it, right? Because you don't have the local load that's big enough for that. So you won't have the anchor client. The data centers will be built on an expected demand that takes time. So who can provide that? The governments can actually provide that, right? So the ones who go out and say, we want to do this data sovereignty, and we can talk about the regulations and how effective they are, but we can do this locally and stimulate the demand, because that will actually start accelerating the investment into the ecosystems, including data centers. If you cannot present to Ilias an anchor client, and sorry, Ilias, I'm going to take you hostage here, Ilias is going to wait until you're up to a level of capacity usage that is equal to what that anchor client actually should be, and that takes time, right? So you have this gap in between until you get to that, you're basically financing it yourself, right? So the shareholders will be financing it through the balance sheet, etc. But if you want to accelerate the growth, it has exactly to be also with a government-supported demand, rather than either waiting for cloud hyperscalers, or that the government says, oh, we're going to build our own, because that is probably not going to stimulate the whole AI growth, nor is it going to help the build out of private invested data centers in infrastructure in the countries.
Thank you so much, Robert. Vivek, what are your views about this? And I hear this about data sovereignty a lot as well. I think someone, again, in the panel indeed said, perhaps we need an Africa-wide data sovereignty. I don't know how that works with cross-border rules and regulations. But Vivek, what do you think will stimulate this? Do you agree with Robert?
Look, Ishu, I would think a little bit differently. It's hard to disagree with Robert because he's so wise.
Famous last words.
Yeah, I think we may have lost Vivek. Robert made sure the network your network wasn't connected well enough, so he couldn't disagree with you. But we're going to come back to it.
Do you hear me now?
We can hear you now, yes.
Okay. No, I said data sovereignty, the data of government itself doesn't take a lot of capacity. You see, looking at the India case, which is, the per capita, per subscriber per month usage is 30 gigabytes in India. The data sovereignty part of that is only about 1 or 2 gigabytes per subscriber. The rest is entertainment. and that has been driven by affordability. So there's a symbiotic relationship, of course, because the sort of e-identity that has been implemented in India, for example, the payment systems, the alternatives to MasterCard, Visa that have been implemented, they require a lot of accurate and fast transmission. So we're looking at connectivity issues that work very well and affordability of that. So again, it's an all of the above kind of answer, that there is a synergistic demand that grows. So data sovereignty is important not just for government as well. You see, as AI kicks in, banks, different government departments, central banks, even a supermarket chain like what do we have in across Africa? Woolworths in South Africa. They're going to have to think about sovereignty of their intellectual property in the context of AI as well. So it's quite complicated in that regard. So the sovereignty issue, unfortunately, is I think oversimplified in the way we look at it. But the infrastructure requirements are quite dispersed across various things. Hopefully that is helpful.
Yes, thanks, Vivek. That is actually quite useful. But let me go to government, since there's at least a policymaker on the call, Dr. Bakare. So Doctor, when I sort of put everything in perspective across the different conversations, particularly on the data center side, and I'm thinking between data protection, which is where these discussions around data sovereignty and in the cross-border flow of data that comes in, and the need to also encourage people to deploy these assets on the basis that there wouldn't be a significant hindrance on their ability to operate them without a lot of constraints from government. The question is, do you think, or do you share the view that assets like the data centers needs to be further regulated within frameworks that we have today for mobile wireless network services? Do you see this as an incentive to stimulate growth, or you think less and less regulation, or perhaps even self-regulation should be the core of policy trust for this industry to support the sort of growth that we're looking at?
Okay, so thank you very much, and Kazeem. Hope everyone can hear me clearly.
Yes, sir.
Okay, so thank you for that very interesting question. I think it's very important, to note that government is meant to actually be an enabler. A government is meant to provide that enabling environment, for digital as in transformation, within any within any society or as in country. And as such, it's very important that we are minimalistic, within the operational level. As in that said, as what you mentioned, it's something that really needs a balance, to be as in striped. As in meaning that yes, while government is meant or is perceived to regulate technology, it's also very important that government promotes developmental regulation that are not stifling. Okay, and like you mentioned, being able to do this also means that you need to be as much as possible provide that incentive, for industries, to self as a regulate. So it's really very important that government, and also the private sector and every other stakeholder, come together, to help ensure that any regulation that will be made available, should be developmental, should be highly adaptive, and at the same time, ensure that it does not stifle growth. Yes, while the preservation of data privacy, it's really very important. There should also, be an incentive, to help ensure that, government also promotes, the pervasiveness, of, data center, within the Amazon country or the Amazon continent. So, in other words, I think what is really very important is for there to be this, as a collective approach, not only from the government, from the private sector, and even from, the international society. Thank you.
Thanks, Doctor. I think we'll go to the last bit of question. I think this is for everyone in general, very quickly, so that we can round up the session. If you were to focus on one area of development incentive or collaboration or whatever it is, where do you think the continent needs to focus the most to get the next level of growth in digital infrastructure? I mean, there's been, a lot of conversations there. I know we haven't talked about more specifically AI, compute, human capital, infrastructure, but where in this entire ecosystem do you think, and I think this is for each one of the panelists, where do you think the continent will get the most value in terms of bandwidth for advancing deeper infrastructure growth in the next 5 to 10 years? Who wants to go first? Vivek, you want to go first?
Yeah, thank you. I don't really deserve to go first on these sort of issues, but I'll give it a shot. And that, look, I think things that unlock the transmission of credit is what I wanted to say, and that requires a little bit of explaining. So I think this has been mentioned, and going back to Ayotunde's very articulate statement on explanation of the sachet economy. You see, the African consumer actually pays quite a lot, higher per unit per kilowatt hour of energy, per liter of water, per sachet of milk. Across the board, the African consumer pays a lot compared to other peers in the world. They also pay a lot in comparatively on household income. But that doesn't come across into business plans that folks like Akin and Ilias and others work on. Because that is not formalized, it is not seen as a consistent, dependable revenue stream for the companies that sit in the middle between the infrastructure and the end consumer. That doesn't crystallize. Now that, from my understanding, that is one of the biggest problems and challenges we have to articulate the demand, to actually translate, to create that it'll be okay, we'll get paid to make that investment, because every investment is on an expectation of a return over a long period of time. And actually digitization of the economy stands to make that possible, that transmission of credit. Right? So everything that we have talked about today, in terms of ambition, in terms of the interconnectedness of the different infrastructure elements, in terms of coordination between governments, of all of that falls to place. But I think we need to understand that there is what is holding us back is, we talk about risk perception, but the other end of that is the fact that extra amount of money that the African consumer is paying compared to their peers, we are not able to convert that into a business case.
Thank you so much, Vivek. Demand articulation. That is so precise. Mr. Coker, where would you sit this?
Yes, true. Thanks. It comes back to that demand piece as well. But you see, if you generate demand without the backend capacity, that takes a long time to bring into the market. Then you have a mismatch, and you can't meet the demand. So it's a very it's quite a balancing act. And if you look at the data, the growth in that demand is there. Stimulating it, just to build on beyond what Vivek said, is the kind of proactive action, a bit like Project Bridge, the 90,000 kilometers. You need to be able to get through meaningful broadband out to the eyeballs. And we need this happening across the continent. The other thing also is the kind of progressive stimulation of investment that helps drive that demand side. On the supply side, the kind of enabling policy around access to energy. We also talked about issues around ease of saying building the infrastructure, land, affecting perfection, and all of those things. There's a whole range of things that need to come together. But the demand will, the delivery of infrastructure will go to where the likely demand is, and we've seen the core tier 1 markets. As we make sure that you're able to deliver services from one country to, say, multiple countries, however that's achieved, you then see that the build of the investments into demand goes to where you have the connectivity, where you have the power, where you have the right enabling policies to build that, and then the scale will come to meet that demand. Building that, the demand side also, we have that demand base in place in what we call the social economy, what people will pay, making sure that they can buy as they go on a day-to-day basis. If you get those two right, we'll start to see that growth on the demand side and the infrastructure delivery side. Having said that, Robert also said, we have large DCs coming in place, and a projection, especially in places like Lagos, for instance, of increased capacity coming in. We have to get that in place to make sure that the key players who look at what you have from an infrastructure point of view will be happy to scale. This is already happening. We're already having hyperscalers coming in at different locations and stuff like that. There's some baseline things that have to put in place that then enable the really big scale to come in. And that's already happening. And if these things were not happening right now, that scale won't come in. So we're already on a trajectory to get some fundamentals in place that will enable the scale to happen, and from the infrastructure point of view, to plug into the demand side.
All right. Thanks, Mr. Coker. Again, still a demand articulation, but you also added the element of how resilient and robust our delivery regions are to match that demand. Robert, what are your views?
Yeah, probably going back a little bit to the data sovereignty or data localization, right? Because they are directionally positive. I think we have 39 countries now on the continent who have them in place in various shapes and forms. But if you don't have enforcement or defined deadlines that don't really materially change the behavior, right? But what I would like to see is an expansion of that, where governments are coordinating ICT, power, and investment agencies so that data centers are treated as critical infrastructure rather than niche projects. Because what I'm seeing quite a bit in countries is you often have new digital ministries or sometimes an add-on to the telecom ministry, but they are struggling with actually have enough power to make this happen inside the governments, right? And if you start building upon data sovereignty and make it critical infrastructure, as I said, with ICT, power, and investment agencies, then you really will start a powerful drive towards the ambitions that we have. If we don't have that, it's going to be very fragmented. That's my concern.
Thank you so much, Robert. Alma?
Yes, I think I'm looking at it a little bit from a different angle, and going back to the discussion of ambition, right? I think ambition is definitely there. The capital is also there. It's now the matter of the bankability of the capital. So for me, execution isn't one important aspect. And for the execution, we need a very strong coordination, both within the government, but also regionally. Like if we talk about the governments individually, then it would be good if they have like a single empowered whole of government delivery authority to build and govern the pipeline and also digital infrastructure projects, because we do face issues of within the government, between several ministries, at different levels of government, subnational, federal, and state governments, right? All of that coordination really hinders the implementation and execution. But also regionally, we didn't really touch that aspect, and especially for data centers and for data hosting capacity. Like if we look at the West and Central Africa, and we have conducted diagnostics of data hosting capacities and opportunities in the region. And we see very varied demands, but also capacities. And now, for instance, Nigeria and Ghana is probably in a way competing, right, for hyperscalers to come in. But then, and who would be the regional hub for data hosting? And for that, we really need to have those mechanisms of coordination between the governments in the region. There was an recent digital summit in Cotonou in November 2025, where the governments of Western and Central Africa signed a Cotonou Memorandum of Understanding, Cotonou Declaration, right, where they agreed that they would work together on establishing those mechanisms for kind of regional data hosting capacities, for talent building, for creating that demand, for infrastructure mapping, and also inter-state linkages of broadband infrastructure. I think those are very important points to scale up and achieve that economies of scale in the region and in the Africa. Thank you.
Thanks, Alma. Ilias, your view?
Thank you, Kazeem. I think I'm going to stay down to earth. So I think operationally, there has to be a simplification. So like I was saying earlier, I think having a point of contact with the government would simplify a lot all the development of digital infra projects. The second point, I think, is enabling demand. And when I say enabling demand, so it's very broad, of course, but you could have, if you take the example of Nigeria, Lagos, why isn't it a hyperscale region yet, right? Because we're hoping for demand, we're hoping for hyperscalers to come. But what happens if one really wants to come and develop a 200 megawatts facility in Lagos? Do we have the infrastructure today that can support that 200 megawatts? So we need to enable the demand. We need to make things possible for things to happen. And so developing infrastructures and preparing the regulatory framework, I think, is very important in that regard. So I'll just stay at that. Thank you.
Thanks so much, Ilias. And Akin?
Thanks, Kazeem. I think it's partly been touched, but I'll answer this slightly different. I think in terms of big swing factors, one way you can catalyze demand through two things, right? If you reduce the cost of something or if purchasing power increases, right? And I think one big swing factor in the sector is probably on the power side, because there are two ways to look at it. One is on the data center operation side. That helps to reduce the cost of the actual product. But when you actually think about the impact on the economy in general, right? Obviously, we know today a lot of companies in countries where there are power issues, a lot of companies are spending significant sums of money just to power their businesses. And if the power reforms that just cut that cost line, companies will have a lot more profits to reinvest. They can invest in technology, they can invest in all these things, and that will drive demand. And I think, if companies are more profitable, or if they're not spending that much on power, just generally in the economy, that can also bring down the costs of products as well. And if the average consumer has higher disposable income, then, when we speak about, driving mobile usage and, data, etc., these are the things that actually count. So I think power is one important way to solve things from both sides.
Thank you very much, Dr. Bakare.
Okay, so thank you very much, Akin, once again. So as far as I'm concerned, really there's no single silver bullet solution, to helping Africa improve its digital, public infrastructure. Rather, we should have a composite of as in strategy. So I believe that the very first thing to do is to start, with the extent master regulations. So what does that mean? We need to harmonize overlapping and, conflicting regulations under the purview of disparate government, agencies contributing to the digital economy. Because usually the challenge is not absence of as a regulation, but its fragmentation. For example,
Can't hear Dr. Bakare very well.
Can you hear me now?
I hear you now.
Is it better now? Oh, okay.
Yeah, better.
Sorry about that. So, like I was trying to say, I think it's very important that we create regulatory sandboxes and unified compliance framework, that allow operators to meet, multiple regulatory requirements, through a single standardized process. For example, as in where I work, as in NITDA is already championing this by encouraging, the concept of co-regulation between relevant agencies. For example, the code of practice, for computer interactive platforms and, internet intermediaries, which is more or less like an MOU between, the social media and the Nigerian government, were co-developed and also enforced, by NITDA, NCC, and NDC. Then also, another strategy that I believe is very important, and mind you, most of my strategy is coming from the government as a perspective. So, like I was trying to say, many African regulations, specify KPIs and targets as output, rather than a security and performance outcome. So this kills the ineffectiveness of as a regulation. Then, thirdly, if you ask me, digital infrastructure evolves as in rapidly. However, our regulatory approval process, takes a very long time, sometimes about 6 to 18 months. And by the time approval is granted, technology has moved on. So therefore, we must create, this fast-track regulatory processes for infrastructure investment, above certain threshold, with streamlined compliance and also as a verification. So therefore, to put all this together, I think it's important that in 2026, African government, should publish some sort of digital infrastructure, delivery dashboard, a dashboard that will be publicly tracking fiber deployment, for example, data center capacity, cloud adoption, power reliability, for digital infrastructure, and capital mobilized. We need to make this as in transparent, updated as in quarterly, and hold, agencies accountable. So, and, like they say, what gets measured gets done. So when delivery becomes, visible, tracked performance metric, at its highest level of government, then execution, will follow. So until then, we will continue to have impressive policy documents, but disappointing infrastructure reality. So in other words, the strategy must flow from the strategic to the tactical and also to the operational level, so that Africa in the near future, particularly starting from this year, can, gain traction and improve its public digital infrastructure. So I'll just stop here. Thank you.
Thank you so much, Dr. Bakare. We have about 5 to 7 minutes, and then there's a question that I was hoping between Robert and Vivek, or you may be able to provide some insight, and it's basic. When Alma was speaking, she did mention the need to also look at efficiencies across regions rather than duplicating assets, so that you can find tailor-made solutions for the rate that meets the rate that the region or the continent is grown, rather than deploying infrastructure at size that's not commensurate to the demand. So, quick question. Should we focus on wireless services access, on digital infrastructure, given the fact that probably about 20-25% of the continent today do not have access to basic digital infrastructures, to telephony and the data, internet services? Or should we focus on regionalizing assets like data centers at scale, rather than deploying in small markets where really there may not be proven or provable case of utilization within a short to medium term, but then that can grow as other adjacent infrastructure that helps to stimulate growth at the compute and data center level, like the wireless access and the fiber, have grown to the scale that they can support this deployment. Where do you think the continent needs to focus?
Robert, do you want to go first?
Sure. So, I mean, the idea is great. I'm probably worried about the timeline of execution of that, right? And I think I understand the notion, but I do think you need practically, and Dr. Bakare just made a very good point, right? You don't have the time for long discussions, right? So I do not think that a regional solution is the path forward if we want to have the regional growth to meet the ambition within a reasonable timeline that we want. And I think we have seen it with the various power pools, et cetera, et cetera. It's tough. It's very, very tough to do this regionally, and that should not be underestimated. So I understand the idea. I'm probably concerned that it's gonna expand the timeline considerably.
Thank you.
If I may add to that, we are thinking of actually equating digital access to the Mission 300 energy access, and asking for the World Bank, and Alma, you hear it from me now, asking the World Bank and the AfDB to really consider turbocharging policy and capital for this. Because I'll tell you very simply, there's a lot of discussion on job creation. So this is outside the digital space. And if you look at what's happening outside, if we want a 15-year-old today, in 10 years' time, to have the same skills and opportunities that their peers are having now in countries like Vietnam, Malaysia, India, Uruguay, Paraguay, Brazil, Mexico, take your pick. Very rapid access, affordable, good quality access to digital data and skills is going to be very important. I mean, people are adopting AI and robotics and at a scale and at speed elsewhere in the world that actually, at the rate at which we're moving in Africa today, we have a real risk of slipping behind. So we'll have all these plans for job creation and things like that, but won't come to anything if we don't match to the skill level and the capabilities and the infrastructure that is being built are on digital capability. So we need to supercharge where we started the conversation. We need to supercharge our ambition on where I need to go in the next 10 years, or 5 years, 10 years. It's quite immediate, actually, to be honest.
Thank you, Vivek. Thanks, everyone, the panelists and the people who have participated in the session. We've come to the end of it. And we're hoping that the next time that we'll speak about this, I think consistent with what Dr. Adele said, we will be farther along the realization path than just discussing these issues. But good time, and thank you to everyone for joining in and participating. Thank you.
Thank you so much. Thank you so much, Kazeem. Thank you so much, all our panelists, for what has been a very impactful. Yes, please, can we clap? What has been a very impactful, very enlightening, and very forward-looking session, learning the big swing factors that can significantly move the needle, stimulate demand across the digital infrastructure ecosystem. And we appreciate all your insights, your commitments, your time, and for everyone who joined, your time for listening to this. So we'll send a summary of this discussions. Please be on the lookout for that. Thank you so much, Kazeem, IHS Towers, Zibi, Xalam Analytics, Dr. Coker, Open Access Data Centers, Akin Akin-Taylor, AIIM, Dr. Ayo Bakare representing Dr. Kashifu Abdullahi, Ilias Djouai, Alma Nurshaikhova, Robert Skjodt, Vivek Mittal, AfIDA. Thank you so much. For the connectivity people, next week we are hosting a conversation with Martin Krina, Director General of the World Broadband Association. It's a global industry body bringing together leading players across the broadband value chain to advance next generation connectivity worldwide. Please be on the lookout for that if you're interested in learning about wireless, connectivity, fiber, shared infrastructure, and of course key lessons for Africa. We'll send some details out shortly. That said, thank you so much, everyone. Thank you for being a part of our 2026 Africa Digital Infrastructure Outlook session. Have a great day and great week and a great rest of the month. Thank you so much.